This is MyStockScanner Live, an extra edition as we have so much news due to the earnings season. Trump and China are meeting up in South Korea. The Fed's decided on the rate cut and Powell speaks. But before we get to it all, I'm going to ask some questions to these two gents, Liam Flavel and Hans Henrik Nielsen. We should believe that I have celebrated that Carlsberg had earnings today with the difficulty of speaking here. But let me assure you, it might be an extra show, but it doesn't mean that we don't ask the tough questions to our stocks. Is it a quality stock? Does it have an upside? And is there timing in it? But before we get to all the news, I want to take a little extra news for Hans Henrik and ask NVIDIA, $5 trillion. I know the Americans invented this trillion thing, but have you ever thought that it was going to cross that line?
Yeah, it was a matter of simple math. And there will be more companies crossing that line. So it is an insane number. They could buy the GDP of Canada twice with that amount. So I think Iceland 166 times. So it's insane.
It is absolutely insane. We will not talk too much about NVIDIA on the show today because we look at the poor companies that are only trading, have a market cap of $4 trillion. That's companies like Google, Meta, and Microsoft. We'll also sail by Kongsberg as they had earnings today. And we'll get to Danish harbors and talk numbers from Netcompany, Carlsberg. And then we have some bombs to the tune of 44 and more than 50%. Stride and Pfizer, last one is on the S&P 500, and they simply bombed yesterday. And we're going to look into what happened. And it sounds like we will be talking about 691 different kinds of stocks, which is the number of the day. And those 691 are all different. How it relates to the show, we will tell you at the end. But right now, earnings. Liam, you're up. You are a tech guy, so we're gonna look at the earnings that is Alphabet, and that, of course, is Microsoft and Meta. If we look at them one at a time, yesterday Alphabet had a jump in after hours, and you have the numbers right here, how it looks when they brought in. But after hours trade is what we really have to look at as well.
Yeah. Google, well, Alphabet sort of shot up. They were up 7% at one stage, and Microsoft dropped and Meta dropped. Microsoft was down about 3.7% when I looked at it this morning. Meta dropped about 8% overnight, which is a really interesting one. And when you look at the numbers, you probably scratch your head as to exactly why they dropped, because all those numbers you've effectively got here, Microsoft has seen revenues of $77.7 billion. That's up 17% over the quarter a year ago. Earnings per share is up 13%, but the thing that spooked the market a little bit with Microsoft was capex was up 75%. So most of that is going to AI data centers, and people are a bit concerned about that.
Can I ask? I'm going to ask like a 5-year-old. I know that our users are pro, but then forgive me for not being pro in that sense. When you talk capex, what do you mean?
As capital expenditures, so that's the amount of cash that Microsoft or any of these companies are actually spending on hardware, on actual physical assets that to run their business. So in this case, most of the capital expenditure is going into AI and data centers, just to service the need of the data center and the AI use out there for the various different mechanisms they have in place to use AI. They all use them slightly differently, which is the interesting bit. But yeah, $34.9 billion Microsoft spent just in the last quarter, and that spooked analysts because it was higher than expected. And the CFO in their earnings call afterwards turned around and said it's going to be higher for the following quarters as well.
And in that sense, as you said, you are a tech specialist. You're the guy who keep an eye out for this for us. Anything in those numbers that they put out, and I know these are just quarters, we're not talking the whole year, anything that surprised you in those numbers and sort of legitimized either a jump or a fall?
The surprising thing was, well, I suppose the capex isn't a huge surprise. We all know they're spending massive amounts of money, and the market is only just starting to look at, well, are we actually going to get a return on that investment? Because they can spend all the money they want, but if we're not going to get a return for investors, and that's what we buy it for. So this EPS number is earnings per share. That's what we buy as investors when we purchase a share. We're buying a part of the earnings of the company, so that you get paid out of the profits. So yeah, that's where people got a bit spooked because they're spending so much money. And if you move on to Meta, Meta had a fantastic set of numbers. Their revenues are up 26%, earnings per share is up 20%, but their capital expenditure is up 111%. And for them, when you got Microsoft and Google, they actually create these data centers. They've got all this hardware they can sit there, so it's an asset that they can reuse and resell to people. Meta haven't got that. They don't have their own data centers. They are simply using AI to make their technology better, to sell more adverts, and to actually entice people to look at their platform more. Those are the two big things they're doing. And you can see their ad impressions are up 14% and ad prices are up 10% over the last year as well compared to the last quarter. But again, what spooked analysts and investors was that 111% increase in capital expenditures. It's more than expected, and there's no end in sight for the amount of money they're going to have to spend.
And if you look at Google towards the end, it again, it's impressive numbers that they put up. And just for, if there should be somebody who doesn't understand why there's two different registers of Google on the stock exchange, there's one with the L at the end, and then the other one is just Google. What's the difference?
It's different in voting rights. So you have different sort of abilities to vote on various different things with the different shares. That tends to be the difference between them. Some of them, there are tax issues amongst A and B class of shares, but with Google, the A and the C class of shares, that's what it comes down to. And with Google, they had a fantastic quarter. And people were worried that the search revenues would go down because AI is starting to eat their lunch effectively. But we're not seeing that. We're seeing a 13% increase in search. So their ad revenues are going up as well. Also, people like the fact their cloud was going up 34%. That's their revenues they get from cloud. It's still a lot smaller than Amazon and Microsoft, but they're catching up fast, and they've got their own hardware in their data centers for AI. So they're not reliant on NVIDIA and the increased prices that they give you. My pick on the bunch, to be honest, if I just look through them very quickly, Google on our value chart, they're all high, exceptionally high quality companies. Google on our value
we're
chart.
Not seeing your value chart right now, Liam.
Yeah.
Sorry about that. We don't
please
want
show.
that one, do we? Yeah. I'm on a different computer, so replace
Yeah,
screen
okay.
sharing. So I'm a bit, there we are. So we've got Google here showing our valuations tab. We're actually, it was already high. And I said the other day that on Monday, I think it was, that my pick was Google and Microsoft, because Google is such a high quality company in this tech space. They're sort of the leaders, because Gemini is one of the best AIs out there. Their data center is growing very quickly, and they're very well respected. So they've got everything going for them, but they're incredibly expensive. So that's my least favorite, because there's the least upside in the worst case and our base case on there. If we just switch over to Microsoft very quickly, we'll see they actually are a decent sort of potential buy here, where we can see actually they're down at the bottom of the channel here with the analyst estimates, and we've got around a 5% downside over the next year, and potentially a 33% upside, or even a 40% upside. So Microsoft are looking good. To be honest, I was quite surprised when I ran the numbers in Meta, where we can go into the valuation summary, and we can see there's actually a decent upside in Meta as well, because of that extra ad revenue that you've got. You can see here, there's potential up there, probably better potential than Google. But Microsoft is my pick of this bunch, definitely, just from a valuation perspective.
And we are gonna talk, of course, we're gonna talk more about these stocks in the coming days. It's simply, I'm just gonna say, you said it was their lunch. It's almost our lunch, because to talk about them. But you also have the Tech Thursday coming up, Liam, today as an article on our platforms. What are you gonna be writing about today?
I'm going to be talking about how rubbish AI is.
Great.
That's the only teaser I'm going to give you.
It works. I'm going to be reading it for sure. And believe it or not, we almost kept Hans Henrik quiet for 5 minutes here. It was
Yeah, that's
yeah.
amazing.
We I won't say that we enjoyed it. We always enjoy when you're here. But you had an extra inning, if we are staying in the baseball language, yesterday, and you had it because you were commenting on Powell, the Fed rate decision yesterday. But that's not where we start with you today. We start with the fact that that we had a meeting between these two guys, and one very smiling. I haven't seen him more happy probably since he met somebody called Jeffrey some years ago. But here he is with Chi, and is equally happy. He gave the meeting a 12 out of 10. What does that even mean?
Well, I think that is the same math he used when he said he would lower the price of Novodrox with 1,200%. So that is, I think that is the same nonsense that we also always hear there. However, it is of course important that Xi and Trump are meeting up, and there are something resolved. As always, we had predicted that a month ago that he would come out with some comments saying it was the best of the big meetings and all that nonsense. However, there was something coming out of it. If we look into the summaries, we can see that Trump will cut what is called the fentanyl. I know it's a bit small here, but he'll cut half of what is called the fentanyl tariff. That is an insane 20% tariff he put on Chinese products because of something drug smuggling, fentanyl. It was mostly for his home base, but half of that is cut now. And he also says China will buy huge amounts of soybeans, which of course they won't, because they have promised that also in last trade war. So they might up it a bit from zero, but they are buying from Argentina and Brazil now. There are something about rare earth minerals where China says, yeah, we are open to do a bit more on rare earth minerals. So there is something. It is important or interesting to see that China is basically saying, yeah, it's an okay meeting. We are open to negotiations. Had this been in April, the stock would have, all the markets would have gone up 10-15% now. But there was basically nothing. And one of the reasons was there was a tiny other thing yesterday evening.
Yeah, I'm looking at the futures right now, and they're basically flat or just a little bit in the red. But that's not due to what happened in South Korea. That's what happened in the US.
There are two reasons. One of them is that the market know Trump now. Xi and Trump is meeting again in April, so that is in 6 months, and at that point they won't even have a finished deal. So from now until then, it's true social and back and forth and amazing deals and all that. We're used to that, and people are getting a bit immune to it. However, something else happened yesterday. I commented on it live on the in our group yesterday, and that was Fed interest rate decision. And yes, if you're sitting out there thinking, isn't that the nerdiest thing at all to spend a Wednesday evening on? Yes, it is, but it has an insane effect on our investments. And what Powell is normally a very quiet guy, and he is politically correct. But what he did yesterday was give Trump a verbal spanking online in front of the entire world. He basically said, not with these words, but he said that stupid tariff war is putting extra on our inflation. It's cutting off the GDP growth. It's basically getting the international trade to a halt. The shutdown, the government shutdown, we don't get the numbers. He seemed a bit frustrated and with these numbers missing. So basically, that was a very, very, what we call an action-packed meeting, as action-packed as it can be with a, I don't know, 70-year-old gray-haired a man standing in front of a group of finance journalists. But it was action-packed, and it had ripple effect instantly. We saw with, I know this is even more nerdy, but this is how much the market thinks, how they're pricing in different scenarios. And before the meeting yesterday, there was a 90 to 95% probability of Fed lowering the interest rates again in December. after he started talking, that shifted, and this is a dramatic shift, even though it might seem small. But market all of a sudden said, "Oops, they're not going to lower rate in December," and I actually think there is a decent chance they won't. So that was a major meeting yesterday.
I'm not going to ask you if you can put if you want to put money on it, because we don't gamble, we do stocks instead. But the thing is, you can gamble on anything. I think that somebody even gambled on the whole thing about how long the handshake was between Xi and Trump yesterday.
That was long, I noticed.
that was long.
Yeah.
But let's get to something investable, because let's get a little closer to home, in that sense that we're going to go via Norway, because Kongsberg came out with numbers. And Liam, that was a little bit disappointing according to some analysts. The turnover $13.3 billion, expectations were 14.7. Your take on it?
Yeah, they didn't have a very good day at the office, really, did they? Yeah, they've announced a split. They're going to demerge their maritime section and send that off as a spin-off that the analysts haven't particularly liked. We had the similar sort of thing with ThyssenKrupp last week, which had a very similar reaction in the market as well. We had we looked at this a couple of days ago, didn't we? And we said then, yes, it's a very high quality company. Yes, it's in a downtrend at the moment, but there is upside, definitely. But we wouldn't touch it. And that's basically because our third point shows that we're actually below our 50-day and the 200-day moving average on the chart. And both of our daily and our weekly MTIs are red. So we wouldn't actually touch this until both of these went green, and also we saw appreciation above that green line and above the black line, and maybe testing and coming back.
I know that it's rough seas for them right now, and they're even talking about, as ThyssenKrupp did last week, spinning off their maritime division into a stock on its own. And of course, it's a way to sort of, I won't say claim money, but it's a smart way to sort of show you can invest over here, you can invest over there. We're both good companies, so to say, but it's not necessarily a good thing for their stock.
Not necessarily, and it depends. Yeah, these things are done to really allow a company to focus on its core business, and that we saw was potentially a good thing last week at ThyssenKrupp, because they have very different segments of their business. I think the market is looking at Kongsberg and thinking, well, actually, we don't see as many synergies here that you're going to get out of demerging your business. Therefore, we're going to mark you down a bit.
It's interesting in that sense what's going to happen, because it will have a ripple effect, and we will see it in the coming weeks once they decide how many stocks do you get from your Kongsberg stock in the new maritime division, and we'll get back to that. As said, we are slowly but surely getting to Danish harbors, because there's been also some important earnings in Denmark as well. We had two companies coming out with numbers today. One we have been looking at for a long time, Netcompany, and one we've been drinking for an even longer time. Carsten, no, we haven't. Not on the show, of course, but it could have been outside meetings here. Carlsberg, Hans Henrik, take it away. Carlsberg.
Let's just start very quickly with there's not too much on it. Carlsberg disappointed a bit on revenue, had 500 million Danish kroner less in revenue. However, they came out with some positive news about the synergies with that Britvic, I think it is, the merger they made. So that was good. There is some good upside in it. However, there's a big hole here in our value graph. That means that they haven't made any money, and we do like to see companies proving that they can actually make money. So we wouldn't buy it right now. It's a bit hard to see what is fair value. We can see that the stock is this is not live, but it is just about the same as it was yesterday. There's not much in it, and right now it is too much in a downtrend for us. Netcompany had a lot better earnings, actually. As we said, we had that the other day, and I was a bit trigger happy. I wanted to buy it the other day. It was a good setup for about everything, basically. And they surprised positively on 30 million Danish kroner on the earnings, and their margins went up about 2% from 14.5 to 16.6. That was massive. So what is happening right now with that is that I'm actually considering maybe buying it. Just before the show here, they were up at 297, 298. So that is actually a confirmation of what we looked at the other day. I am considering, should that be a part of my portfolio today?
And that's one of the things that you get as a member of MyStockScanner, is that you get information about stocks that goes in and out of the 3-point playbook portfolio that you can follow. By the way, that portfolio is up at 32.4% at the moment, mainly also because the difference between the last couple of days is a little higher value of the dollar, and since you are in US stocks, that might go up. But now we talked about things going up. Let's talk about things going down, because we can find that in the market as well. Put up two stocks right here, Fiserv and Stride. The one, Fiserv, is a S&P 500 company. That means that it's a company that is on between the 500 biggest stocks in the US, and they dropped.
They did. Let's just go to Fiserv.
Was it
so
was
it was 50%, something
Yeah.
like that. We got a couple, and
Unheard of.
yeah, like this. It is, and it shows you just how price for perfection this market is. And it's a phrase we've used a huge amount in the last year or so, and that's because you see these sort of drops when this happens. So if we look at the 3-point playbook page very quickly, we can see that it's a very high quality company at 79. We've got earnings per share that are supposed to be going through the roof, and that's what analysts expected. The PEG ratio is very low, which is what we like to see. Revenues are going up. Everything is in the green, so everything looks fantastic on this stock. You also see with the drop, we're already in a downturn anyway with this particular stock, and the drop just took it even further down. Just going into it very quickly, there is value in this company. The earnings came out that they said they weren't going to earn quite as much as they expected in this quarter and potentially the next quarters. We answered a question in the group yesterday where someone was asking what was the drop, and how could we have protected ourselves effectively. We protect ourselves by our rules, and the third point of our rule says that we don't go into a stock unless it's in an uptrend, and the stock was in a downtrend from about the 3rd of April, and it's gone all the way through. You can see our daily and weekly MTI indicators are red pretty much all the way through from there. And if we'd have held the stock in this upturn up here, then we would have come out definitely in this gap here, where the stock just dropped like a rock here at the same time.
I should say it's only 70% drop we have missed by having our exit rules.
Oh, is that all? We can handle that, but
it's what you guys call catching a falling knife. Now trying to guess when to get in, but again, stick to your strategies. It's the one thing that you have. It's not about emotions. You say that to me all the time, and I get super excited about some stocks, and you kind of go, yeah. Calm down, young man, or old man, or whatever.
We have never called you a young man, but LR Stride was another one that I think started the conversation yesterday, where we can see sort of another big drop in the value chart. It's a very high quality company. They came out and said their users absolutely hate the new changes they made on their platform. So yeah, that didn't go down particularly well. Again, from this point of view, it's slightly different. We wouldn't have been in it at the moment just because it's not in a confirmed uptrend, but it was close to it. So we would have, we would have come out immediately on here. But it's the sort of stock that we wouldn't have been in from the start. So that's where the rules protect us and help us.
I might just add that it's not always we can get out. It happens that a stock drops just out of the blue like this. So we could have been in this and taking it, but that is where it's important that we are only in with small portions of money in each and every stock.
Yeah, that's the diversification that you guys also excellate in. And the thing is that we have an email address that you can use. So one thing is asking us on our platforms and on our social medias, but use our email, FOMO@mystockscanner.com, if you have any questions. This is an extra show that we did. We might run just a little minute long, but we will be back tomorrow, by the way, with our normal show on Fridays. We broadcast on Monday, Wednesday, and Fridays. And every day that we broadcast, we have a specific thing. Tomorrow it'd be a face-off, and we promise it won't be Fiserv versus Stride tomorrow. We're not going to pit those two against each other and choose one. We're simply not going to do that. On Mondays, we have our 3-point playbook portfolio, which sits as 32.4, as I said, year to date. And then on Wednesday, we have the watch list, which is the result of the poll that we put out on Tuesdays. In every show, we have a little thing called Number of the Day. I said 691, and that's a matter of fact the amount of different beers that Carlsberg produce. 691 different beers, and I hadn't had a single before the show, I just want to say. And when we broadcast tomorrow, believe it or not, even bigger, I'm almost going to say bigger companies, but it's close. Apple and Amazon are going to come out with numbers. One thing that I'm looking forward to is Eli Lilly, because it's a little bit comparable to Novo Nordisk, that, well, sliding a little bit today, 2.5%. You guys, Eli Lilly, they did a deal with, again, like everybody else with AI. Is that going to give them a bump tomorrow?
Well, probably everything AI bump thing. If we look at actually their competitor Novo, it's down today because they are making a bid for a competitor right now. Yeah, it's interesting times. Eli Lilly, will it go up? It is a tough market right now, but they have been in a bit of a better position than Novo lately.
We shall see. As said, one of the things that is for certain is that you can ask questions anytime, and it's also certain that we will be talking about them tomorrow. They come with, as I said, earnings results after closure today, and we will discuss them tomorrow. Lots of things going on in the market. Remember, we have our articles and in-depths on our pages. That's on Facebook, but also on our own platform, where you can go in and see Liam's and Hans Henrik's answers to your questions. And all that's left today, and we didn't run that late, is to say that MyStockScanner Live Extra Edition is almost at the end. We aim to keep it simple, keep it smart, and all of you keep asking the big questions you should of your stocks. Is it a quality? Does it have an upside? And is the timing right? The 3-point playbook way, that's how we do it. And we'll be back tomorrow with more picks. We'll see